To start us off, just go ahead and tell me kind of who you are, what you do.
Yeah, so my name's Max Grascher. I'm a financial advisor, wealth planner at UBS Financial Services, out of the international branch here in New York, New York. I'm on a team with several other advisors. We specialize in the ultra high net worth and high net worth spaces, particularly, for business owners, entrepreneurs, families, and athletes and entertainers. So the way that we really tend to operate is through a framework that we refer to as a virtual family office. While we take care of the wealth management, and the investments on that side for our clients, we'll bring in, other experts from our professional network, whether that's CPAs, trust and estate attorneys, risk advisors like yourself, any experts that can help with the overall plan. We'll bring them in and introduce them to the client. So rather than just worrying about the investment account, we're covering all aspects of what the client really needs, in both the short term, long term, and even from a legacy planning perspective.
Give me a little bit of background of the CEPA and CPWA and kind of why you think they're valuable for your clients.
Yeah. So the first certification that I got was the CEPA, or Certified Exit Planning Advisor. This is a designation through the Exit Planning Institute, or EPI. They have a very particular and tried and tested framework that assists business owners when they're thinking of exiting their business, they're thinking about selling. It essentially guides them through the process, brings together the right professionals to assist them to make sure they're making the best decisions, whether that's selling the business now, waiting a few years, bringing in outside investors to, potentially grow the value of it, or ultimately not exiting. So, that's essentially, at a high level what the CEPA designation does. A lot of our clients are business owners, so it just made total sense for me to go and get that one. And then the CPWA, so that stands for Certified Private Wealth Advisor. A lot of the content, it's, essentially investment, wealth management, wealth planning, but it's specifically geared toward the high net worth and ultra high net worth. It goes back to, I always kind of like to joke, more money, more problems. The more you have, the more obstacles and hurdles, and the more complex your planning gets. That taught me some strategies, what kind of planning we need to do to make sure everything's covered for our clients in those realms.
We have something similar in the insurance space. It's the Certified Private Risk Manager. So pretty much the same kind of concept. There's a lot of challenges that come with wealth, right? I mean, you see it on the investment side. We see it on kind of the other assets. So properties, fun toys. I consider mega yachts and private jets and things of that nature toys. Probably should come up with some better verbiage. But you're totally right. I mean, there's challenges that these guys and gals face that really we wouldn't know about unless we were serving them as advisors. So yeah, that's really great. You came up with something interesting. So I think we're going to talk about umbrellas and, just personal excess liability, what it is, why it can really be a major benefit for you and your family, just to protect your assets and your wealth. Then also some of the other components for planning, and how, if you don't have these things in place, how you can really leave yourself exposed. Would you mind just sharing if you have an example of a story in which an umbrella policy was used?
For sure. So, I mean, I grew up in the suburbs of outside of New York City. So, a lot of people just in the area of Connecticut where I'm from have pools, right? When it's summertime, you have kids. I mean, my friends who had pools, they would always invite us over. you're spending all summer there. You're spending most of your days, at their pools when it's, 90 degrees and humid out in the suburbs. A frequent occurrence that we see, just to give an example, is you invite someone over to your house, or your child invites someone over to your house to go swim at the pool one summer. Someone slips, running in and jumping into the pool on the side. They know that you have a pool. They know what your house looks like. They know that you have a certain amount of assets. They're going to go after you personally, even though, you had nothing to do directly with the incident that occurred at the pool. Same thing with large parties. I mean, in the summertime, at least, pools and parties kind of go hand in hand. So whether it's one of your guests, you're hosting people, or, one of your children is having a summer party, you go out of town, you have a teenager, you don't even know about something that's happening, but guess what? If there is some sort of event where another individual gets hurt, then you're the one who's ultimately going to be liable. With umbrella policies, it's really that added piece of protection from what your homeowner's insurance is going to cover. And it's especially important if you have something like a pool, or you have a lot of people, over at frequent times. If you employ, household staff, the super affluent will have people that are constantly working in their house. Something happens to them. Those are just a few of the things, but I mean, the first one that always comes to mind when I think of umbrella policies is the pool, just because it's such an easy thing for, a lot of people to have. It can create liability very easily as well.
You have a couple of really key points in there that I want to just kind of add on some additional context for. So one of the things that we advise in the private client space for risk management insurance is making sure that they have adequate medical payments coverage on their homeowner's policy. We call that as the keep your friends and family coverage. What it allows you to do is, in the event that let's say you had somebody over at the pool and they get injured, instead of them having to sue you, you could just take on their medical payments. So if they have to go to the ER, they have to, potentially have surgery, whatever it may be, you're able to tap into those funds without a deductible, and it's not a claim, to go ahead and make them whole. Oftentimes when people are injured, they don't want to necessarily sue, right? I mean, that's not their first thing, unless they have like some kind of intent, right? They're wanting to see how much they can get. But that was one of the things that I learned in the private client space that adds a ton of value. The second thing that you brought up is the liability for your kids. It may not even have been the parent that invited the kids over. Your kid invites a friend, or you have a babysitter that throws a party. I love figuring out what people are covered for, what they're not covered for, and specifically the verbiage in the insurance contract. If you're in possession of illicit drugs, if you're under the influence of illicit drugs while driving a vehicle, right? The auto coverages can deny coverage. And that is scary, okay? Because you think about all the kids, even though states have legalized it, if you're in possession of any kind of substance that on a federal level it's still a felony to possess, you are technically violating that coverage for your auto, which exposes you to your umbrella, which you really want to make sure that you have adequate coverage for. Great example would be in the event that you have a child who's driving under the influence of marijuana and they get in a car accident and somebody gets killed, the auto coverage can be denied, and you want to make sure that you have that proper protection in place on the umbrella. When we're considering risk management and the role of an umbrella for our clients, it's not necessarily even our clients that we're concerned about. It's their kids. So, it's making sure that they're attending defensive driving courses, because auto tends to be one of the bigger exposure when it comes to the umbrella itself. Throwing a party, having people over when parents are out of town, things of that nature. Obviously those are other exposures. So
being, primarily involved in the wealth management side of things, we still have to be aware of these risks and how it can impact that wealth. And that's why, the way that we operate, we bring in experts like yourself and Adam, because you're the ones who are going to be able to go in depth and really know the intricacies of the policies and how to do that. So it's a perfect example there on how, that network essentially plays off each other. And, it's essential to make sure that you have the proper team in place. Another example that came to mind when you were mentioning parties or whatnot, a lot of people will have vacation houses. Often they're not as well protected as, the primary residence. They get neglected because they're only there for a portion of the year. So the chances of something happening in terms of the structure on the property tend to go up. Most people, they have these vacation homes in their own name. That could pose a different problem. People, we're on the East Coast here. People like to go to, Nantucket, the Jersey Shore. A lot of these houses have decks. So not decks that are ground level, but decks up on the second floor, because people like the widow's peaks. They like to be able to see out to the water if the houses are near the coast. A lot of times those are not properly built or they haven't been maintained. You hear stories all the time of the decks collapsing, someone getting hurt, and then bam, that's when, there's going to be litigation involved moving forward. Another big issue that you see in the kind of the spaces that we work with, that people just don't think about as much because, they're not there that often.
You have the liability component because it's not being properly kept up, and you have the duty to maintain your property and protecting those that are on it. But what's interesting, I want to jump back and then, I'll address this first and then I want to jump back.
Yeah.
It brought up something about employment that I thought was really interesting I want to touch on. So when I was thinking about the Jersey Shore, I'm also thinking about they're likely some of these properties are let out on a short-term rental basis. You bring up a great point with that, because they may not even be your guests. You may be renting out that property and this happens. And then all of a sudden you just expose your entire wealth because of titling of the property, the named insureds on your insurance policies. This is something that I can't preach enough to our clients on. If you have trusts that are actually the owners of those properties, that the named insured on that insurance contract is the trust. We see it all the time where we have clients, when they come to us, their policies are all a mess. And that's part of the value that we provide, is we go ahead and we consolidate everything. We go through everything with a fine-tooth comb. We identify redundancies in coverage. We identify gaps where you're not protected. I'm working on a case right now, had multiple umbrellas. If you have $5 million of liability and you have two $5 million umbrellas, what happens is 2.5 pay from each umbrella.
You're not
getting 10. It settles. No, you're not getting 10. So you're paying double the amount of premium for no apparent reason. So that's just one example. We saw one situation with a California property that came under our management, where same thing. It was not the trust that actually owned the property, but it was the individual. And it just creates a whole bunch of headaches in the event that something bad happens and that liability is tapped into. So great point on that. You brought up employment a little bit ago. So I want to jump back to that, because so when I was running the family office, obviously there are employees that we have to help maintain the grounds, properties. We had properties in multiple states, multiple exposures from an employer perspective. If you don't have things above board and properly documented and have good coverage, you can end up getting sued. When you have these employees, if they fall, if they get in a car accident, it's exposing you. We have something called employer practice liability insurance, EPLI. In the event that something does happen, we at least have some protection where that umbrella policy is not being attacked directly. It's the EPLI coverage. So that's something I wanted to bring up.
A lot of people, when they think, oh, this is insurance that the super wealthy are using, I'm not going to be able to afford that. That's actually not the case in many situations. I mean, even though these are strategies we're using for, ultra high net worth and high net worth clients, they can often be applied to, people who don't have that level of wealth, but still have something they need to protect.
Sure. I don't have that level of wealth. I have an umbrella policy, right? If you are a property owner, if you have any kind of assets, you really need to have an umbrella. And you don't need to have a $20 million umbrella. That's not necessarily valuable for you. I mean, it could be if you're doing crazy things and need the coverage, but really for me, that gives me peace of mind that in the event that something happens at my house, I can just rest assured. I think the most that we recommend for our clients is 20 million, and that could be individuals with $1 billion net worth. $20 million usually sufficient for any kind of settlement that happens. There's only like maybe a handful of cases that have exceeded that on an umbrella. It's pretty cut and dry. I recommend it for everyone because it's that last layer of defense.
There was something else that I thought of when you were talking about the coverage levels. So when you're dealing with families, some of them will choose to what we call self-insure, right? They have so much wealth that they say, look, I'm willing to take on the risk. If I'm going to get sued for something, I think that I'll have enough to cover it based on everything I've compiled over the course of my life or inherited. But even if people do have the assets to cover that, I can tell you that if you were to ask someone, would they rather be insured for 20 million or pay it out of pocket, they'll probably say 99% of the time, if not 100, that they're going to want to be insured.
Not on your umbrella. I can tell you that for 100%. Not on your umbrella. Right before this call, I was on a client meeting. We were talking about a property in Florida that they have. This is where, as an advisor, we can provide some guidance on self-insurance. To your point, you never want to self-insure liability. I can tell you that. We never recommend that our clients self-insure for liability. There are situations where it doesn't make sense to obtain insurance coverage for properties that, when you compare the cost of insuring on an annual basis to the overall value of the property, it doesn't necessarily make sense. In that case, it would be better for you to self-insure and take that fund, or those funds that you would have paid for that premium, and put it into a separate savings account that is earmarked as a self-insurance fund. A couple factors that we consider in that is the kind of grade of construction. So is it a quality built home? Has it weathered storms in the past? If we know that hurricanes have come through, that the walls of the hurricanes have hit the home, and here it is still standing with no claims, we can rest assured pretty well, like there is the possibility of loss. But by self-insuring, saving that premium over the course of 10 years, you'll have the funds set aside in the event that there is a catastrophic loss for you to rebuild.
When clients come to us and we look at their entire plans, everything they have, all their coverage, we assemble our virtual family office, we get our team together, we bring someone like Dom in, and he's the one who's taking a look at everything. This is why we have the team, and there are experts in every, category, because that is going to provide you with the best service. One person can't be an expert in every single area within your entire plan, because you want to make sure that you're getting the best of the best for each particular area, and that everyone's also working together and aware of what's going on.
Because we handle all the property and casualty and the life insurance. So we can talk about wealth transfer planning. We can talk about protecting your vacation rentals, or making sure your kids have adequate coverage. So your point about making sure those advisors are on the same page is key, because we're managing all of the risk exposures for the insurance side. On the portfolio side, it's saying, okay, where are we at net worth wise? Let's make sure that we have adequate coverage here. On the life side, we're going to be planning for estate tax purposes. What's the total amount of wealth transfer that we need to be planning for from a tax perspective, so that we can start being proactive in how we fund that tax bill. So
to just add on to that last point, in the process of selling a business, what we see with exit planners, because we work with a lot of business owner clients that go through that, or just assembling your overall plan, the sooner that you can bring people in and introduce the professionals to each other, the better, because they're going to know what's going on from an early stage. No one's jumping in, trying to catch up and get themselves acclimated to your situation. So the earlier you can coordinate and have everyone get to know each other, be comfortable with each other on the team, the better.